Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we have a few things to cover. First off, we're going to be talking about SoFi, Robinhood, maybe some overall macro news, might touch on some war stuff, obviously not a lot. PayPal, a lot of stuff in tech, potentially Nvidia, potentially a new smartphone competitor. It'll be a fun show. After that, we can do a little Q&A, what have you, and then we'll jump on over from, this over to the Tech Bros Weekly, which is formerly known as the Robinhood Weekly, where we'll be talking about a lot of Robinhood with our friends Amit and Crossroads Roy. Yeah, a lot of people saying to evacuate Israel and Iran. I think China just recently came out and said that, and America is saying that as well. Hopefully there's not escalation. I don't see how there's not going to be escalation. I mean, it looks like America is moving much closer to the Middle East right now. Probably not good for markets. I can't imagine that anyone gets excited about anything other than Lockheed Martin or potentially Palantir during those times. But that doesn't mean that the companies fundamentally that we're investing in are hurt in any way. Maybe sentiment on the short side or on the, I'll say short side. On the not so long-term side will be, what was I going to say? Multiples will be compressed, but it doesn't actually affect the businesses. Geez, getting caught up in my words. Let's get started in the actual things that I want to cover, okay? First off, we have a tweet that I actually put out. Let's talk a little Coinbase and Robinhood, because this is quite interesting. Obviously, people know that Robinhood recently put out their Robinhood Gold subscription for the last couple of years, promoting a $5 a month, now $50 a year subscription that allows you to get access to lower priced options, potentially a higher APY on their checking account, better margin pricing, okay? But also a credit card, a 3% cashback credit card. Well, this potentially pales in comparison to the now Coinbase One card. We spoke about this the other day, and the only problem is that you need to be quite an affluent user spending $30 a month for Coinbase One until they introduce Coinbase One Basic. Okay, $5 per month or $50 per year, matching the Robinhood subscription. What you can end up seeing is potentially zero trading fees on up to $500 in crypto trades per month, which doesn't potentially seem like a lot, but this would greatly end up paying for your $5 a month fee that you're already paying if you were to buy $500 worth of crypto. That alone, then you have 4.5% APY on the first $10,000 of USDC. Now, how does that compare to Robinhood? Robinhood has 4%, but it's not capped at $10,000 of a certain stablecoin. So depends on how you sort of look at it. If you're lower on the savings, then potentially 10,000 of USDC is perfectly fine, and $500 of trading crypto per month is perfectly fine. If you have direct deposit going into Coinbase, you're only buying potentially a certain percentage of your monthly allocation of only $500 or less, this could work out perfectly fine. And then up to 4% cash back, depending on how much you're actually holding with Robinhood, to get Bitcoin back, not cash back, with their new Coinbase One Amex card, all for just $5 a month. Personally, I think that this is a pretty compelling offer, okay? And one that I actually think does level them up to compete with the likes of Robinhood for a crypto exclusive lover. If you don't want to go to Robinhood for the equities and the options and all the other tools, and you're just looking for a crypto exclusive offering, Coinbase might have opportunities for you to, get all the products that you want. And this is just the first little bit where they're starting to go after much lower end clientele. Now, not lower end, but I just mean in terms of assets under management, right? So it's a better offering in terms of just sheer amounts, 4.5% over 4%, 4% cash back or Bitcoin back versus 3%. And so if you are a crypto lover, this could be a way for you to get a potential one-up on Robinhood. Now, Robinhood's Gold doesn't actually offer many actual benefits for crypto users. So although they're growing very fast in crypto, this could be a great way to potentially get a separate company that offers potentially more assets, better staking options, lending, all these extra features that Coinbase has specifically for crypto, not for equities, not for options. So the diversified investor will not like this at all, but it's a different offering. Now, I put in another tweet. How does Robinhood clap back against what Coinbase is doing? And potentially they might offer a similar thing to include for Robinhood Gold users, saying, hey, a certain percentage of your first trades will have, free or zero trading fees on it, which would be an absolute blessing, and cross-sell into many more products. Because once you're paying for Robinhood Gold, you might want a Robinhood Gold credit card and equities and, better sales or better pricing on options, better pricing on margin, better APY, right? So I'd like to see how they actually cross-sell this. But overall, pretty excited. Pretty freaking excited. Yeah, and then in terms of this, I also wanted to touch on the sort of theme that we're end up seeing recently. One, Amex has recently come out and said they're going to do their biggest change in their history, revamping their platinum tier credit cards, which is closer to their high-end cards that they end up offering. And I'm not talking about their super tier, ultra wealthy. I mean, cards that people who are actually making a decent amount of money can get access to. So that's pretty exciting. They said we have a new young cohort of individuals and they require new offerings. So cool. We don't exactly know what that means just yet. Then Coinbase One Card comes out with this amazing offering, and they partnered with Amex for this. So maybe they got inspired, right? Robinhood Gold Card comes out with 3%. Now, SoFi is even talking about potentially offering a card that has 5% cash back, but it has to be specifically for dining, okay? That cash back, would have to go into a fund, and then you're invested over time. I mean, just absolutely brilliant. So there's a new modern fight for credit cards for the youth, right? SoFi, Robinhood, Coinbase, Amex potentially. There's some good cards from US Bank and other things like this too that they're still in the fight, obviously, these big banks. But they might not fight as hard because obviously they already have such a massive market share and customers that simply don't want to try anything new. Overall, though, very, very interesting. So that is quite the offering compared to what we're seeing versus MasterCard and Visa, where these companies are falling on potential news that stablecoin adoption will be very, very significant. Now, in terms of that, someone actually messaged me and they said, hey, Tanner, how does Galileo get impacted if stablecoins start to boost up? Is this a potential threat to the business? And I don't believe it is at all. I mean, there's a way that stablecoins could potentially disrupt the way current money is being transferred and the route that it takes from point A to point B. And in that way, there's additional security, better transaction costs, better, like, how do you want to say it? Like open 24/7, microtransactions are better, global, like stablecoin sending from Germany to Canada, for example, would cost the same amount if I was sending it to my neighbor. So great, option for remittances and these sort of options. But Galileo doesn't necessarily do just that, right? They're helping you find partnerships and actually issuing cards. They're helping you manage that money. They're helping, see the inflows and outflows of the money in your accounts of the customers. So regardless if the rails that are set underneath financial institutions is Visa rails or if they are stable coins, you're still going to need a top layer that sits on top of that manages the issuing and, because cards are not going away as well, right? So you're still going to need cards that actually tap and purchase things. You're still going to need to manage those inflows and outflows of businesses or potentially your customers in themselves for banks to manage. So I actually think that Galileo will not be affected at all. The rate that they take on the actual per transaction base might be up for debate, but even then, I still don't see how they would possibly be affected. Who knows? We'll have to see. Either way, SoFi will be fine. We'll see that SoFi credit card in 3 years or so. I don't think so. Paul, I think that they took a really long time with credit cards because they were trying to get their defaults under order. Now I feel like they're really on the right trend, right? So home loans, but back in the day, came out really slow, but now they're ramping really fast. So I think that it's going to get to a part where SoFi feels really confident about giving out cards because they know the customer that they want to give it to, and then like that will be very, very fast. So I think the slow roll of cards like Robinhood Gold Card or Coinbase One Card or something like this is because they've never done credit cards before. But SoFi, coming up on what might be their fourth credit card, has done credit cards before. It doesn't mean that every single new issue of perks and credit cards is going to be slow. It's that the business in itself needs a team behind it. But SoFi has a credit card team. Changing the perks, I mean, that's the easy part. So we'll see. How do stablecoins affect Shift 4? I mean, I don't think that they really would. The part that Shift 4 has to pay a lot for is towards the Visa and MasterCard, network fees. But the part that they get to keep is them running their own system and running the hardware, right? If you can't replace the hardware, it might be the e-commerce players that are affected more. Stripe might be a little affected, these sort of players. But Shift 4 in person, I mean, you can't replace the hardware unless there's going to be some sort of crypto offering. But even then, they would still be able to take stable coins and offer their services for cheaper. So Shift 4 will be fine. In terms of how I think about it right now, I mean, I just can't see how that works. Yeah. Tanner, another show? Payush, yes. I like that you're going live more often. I mean, yeah, it'll be 3 today. Potentially 3 tomorrow. It's fun. It is by far the most fun job I've ever had. I get to just come on here and talk. Tanner's drinking out of a 5-gallon bucket. It's just a Stanley. It's not terrible, or it's not terribly big. It's probably like a liter. But yeah, I go through a few of them a day. Dookie Pie. By the way, I keep seeing comments that every time I see Dookie Pie's name, I say it, and people supposedly laugh every time. But that's his name. I don't know what to tell you. I'm just saying hi to the people in the chat. Everyone should immediately evacuate means that everyone should immediately sell everything. I don't know if that's true. There's been a lot of crises in the past. I mean, this is like the 4th war that we've seen in the last 2 years, and markets continue to rip higher. So my thoughts and prayers are out to the people involved, but my investing portfolio remains pretty emotionless. And I don't mean that to be insensitive, but it means like you kind of have to be, right? That you can't sell every single time that something is potentially a panic, right? You got to hold that. Liter, your Canadian is showing. Well, I don't even know how to say it for you guys. A quarter of a gallon? How do you like? I don't know. Yeah, I say liter. I am Canadian. Ounces. Okay. What is it? How many fluid ounces? 16? I don't know. How many? 12? I don't know. No way. Yeah, okay. 32 sounds right. It's not 42. 32 does sound right because you get like those big cups at in America that are like 32 ounces. No, this is not 40 ounces. Maybe it is. I don't know. 1 liter is 34 ounces. Okay. Cool. We don't know either, but we use it. Okay. Let's see. Yeah, you guys have taken me off course. Let's also talk about some news that came out from PayPal. Now, I don't personally hold PayPal. Some people are offended that I'm covering a company that I don't personally hold, but I'm looking into it. PayPal is now showing off more of what they can do with the PayPal storefront ads. So their ad platform continues to grow. And what you can end up seeing here is that they will have not viewable ads, but literally purchasable ads, which, I mean, personally, as a business, I would need you guys to pay a lot for this ad to be placed on my site, because holy crap, would that take people away from what they're doing so then they can scroll past a pair of shoes and somehow be transported to another service, unless they can guarantee that it's a one-click purchase. But I mean, like, you're scrolling an article on Business Insider, you see a pair of shoes and you're stopping right there, purchase, okay, continue to read the article. I mean, to me, that sounds crazy. I don't know. Maybe that's how they're doing it. But yeah, for PayPal, it's absolutely great. And the way that their advertising works is that they pay for conversion. They don't pay for impression, meaning that someone actually has to click buy on PayPal and hit okay and whatever. Yes, I agree it to be sent to my address, yada, yada, yada. And then the person who paid for the ad gets paid. Okay. But the way that works means that one, they're confident in their conversion rate. Okay. But two, that the amount that PayPal can ask per conversion can be huge. Okay, huge, because it's guaranteed that they are going to make a sale. So if you're selling these shoes, for example, at $150, now PayPal is not going to be selective on the types of products that are potentially sold. I mean, maybe they will. I guess I take that back, because they get paid on the amount of dollars that are actually transacting through the system. So they can be very selective that way. But on $149, let's say the shoes materials are, well, I mean, these shoes look like they might be upcharged because there's somehow a designer of some sort. But let's say it's $40 to make this shoe, and that's probably too high. That means they got $110 to play with. Okay, PayPal knows this to some degree. They can take a large share, I mean 30%, for a conversion to a direct sale, because it's guaranteeing a sale. Now, it's probably not that aggressive. It's probably closer to like 15%, but still, it's way higher than what potentially Google is asking for an impression or a click-through rate, because it's not a guaranteed sale. Maybe only 10% of people that actually click through that you paid for on that ad actually go through. The ad has to be really good, or else your conversion rate could go all the way down, right? So if you're only paying for a click-through or like an actual conversion rate, they can charge as much as they want. This is the brilliance of what PayPal has to offer. And there's no cookies or cache or anything that you could remove, or a blocker or anything that would stop PayPal from making their money on that advertisement. Because if it's being purchased through a PayPal conversion rate, that data is PayPal's. They're not asking for a third party or any connection to a browser or anything to work for them to get that rate. No VPN, no ad blocker, anything could stop PayPal. Well, I mean, it might stop it from popping up, but would stop PayPal from seeing that conversion on their end. That is brilliant. Okay, absolutely brilliant. It's what Dr. Mark Reither actually said was, such an advantage for PayPal. So we just have to see how this scales. He recently just came out and said that, if you look at my past successes, which is Amazon's advertising platform and Uber's advertising platform, two companies that are making billions of dollars through their advertising platforms, that those are where his goals are wanting to be set. Knowing the company that PayPal is, that's the same level of success that he wants to have at PayPal's. And I mean, the offering that, PayPal has exclusively is pretty freaking exciting versus any of the other competitors. So you could potentially even see him surpass this level of success at PayPal versus other companies. So right now they have like 5% top line growth expected for the rest of the year. They said that none of the products that they're working on are being priced into that being priced into that guidance, meaning that things like advertising, these projects that they're working on, have a 0% cut of future growth expected. So anything that PayPal's advertising brings in will be sheer gravy. That's exciting. That's very exciting. I'm not currently holding on to the company, but might be interesting of a play for me to walk back into. I paid PayPal for my 365 subscription today. Is that a Microsoft 365? Is that what you're talking about? I'm long PayPal at 66. Let her run back into the 90s. Not bad. I don't think that that's an egregious price to ask for right here. Whenever Roy says that he is excited to see PayPal go back to all-time highs, I mean, I think that that's a long road ahead. People need to see that the company can accelerate again. But 90s, I mean, you really don't even need to see that. You just need a little bit more buybacks and you'll be there soon enough. Like, if you're still buying back, like, I don't know what it is right now, 8-9% of the company's outstanding shares each year, you don't take many years to get back to that price. Only people I know who use PayPal just use it to send money for free. Yeah, I mean, you can look at the revenue and the customers and the monthly active users to see that people are using it. It's the same sort of argument with Google. It's like your own lived experience doesn't mean that people aren't using those products. And if you see where it lands, and you don't even need PayPal's, data to find that out either. I mean, go to the Apple App Store, see where they land on downloads. I mean, we can do that right live. I would like to think, I'll even assume that I'm potentially wrong here, that they're top 5. I mean, my real assumption is that they're top 3, but that's whenever things are doing well. I know that Cash App has started to reinvigorate, so maybe they've pushed them down a little bit. Potentially, there's always hot apps that end up coming up, like Callshe or something like this, that can beat them out of the top. Nope, never mind. I just checked. In the US, they're number 1. So this is United States Apple App Store rankings for finance. You have PayPal number 1, Cash App number 2, and Venmo number 3. So people's personal lived experiences is different than potentially what other people are doing, even potentially in different regions of the same country that you live in. And PayPal's not even as dominant in the States as where it is in other countries. Like Germany, it's just number 1 all the time. Tanner always has the most vibrant shirts. It's brown. Chime is at number 10. Yeah, I know. And SoFi is going to be like freaking 30. Here, let me just see really quick. SoFi is 33 and Robinhood is 24, Chime 10, Amex 18. Tough life out there. But here's the thing. SoFi, I don't care where they are on the App Store, the amount of new customers that they end up printing will be crazy. Venmo is also number 3, Tanner. I said that. Personally, I use PayPal for almost all online purchases other than Amazon. So I absolutely want to like PayPal for more purchases. The problem is you guys in America are spoiled. You always get the nicest features and everything first. Here in Canada, we don't even have a PayPal credit card or debit card. So it's hard for me to want to use their ecosystem whenever I can't use a lot of their products. And without those products, even if it was a virtual card, okay, that I could potentially load onto Google Wallet or something like this and then tap that way, I can't do that. And then that means that I can't make any in-store purchases. So whether it's PayPal or PayPal for Business, I always find myself offloading that money onto another app that has ways for me to actually spend the money, because I got to be able to spend the money. But I mean, PayPal makes it pretty easy to leave their website as well. Look at how many apps in the top 30 are cash advance apps. So sad. You want to know something crazy is the amount of money that Cash App, including, this is actually scary too, including Robinhood's earnings, what percentage of their earnings comes from instant withdrawals? It's shockingly high. It's shockingly high. Like, I'd like to see, well, I mean, equities still makes up for more, but like, it shouldn't be close. Robinhood is known for, trading stock. The stock trading part and their instant withdrawal fees should not be anywhere near close to each other on similar quarters. I think this quarter will probably be north of $30 million made from instant withdrawal fees. 30 million, probably north of that. So, yeah. It's simple, leave Canada. It's not simple. We're only really bordering like one country. And you guys have this guy that hates people coming in right now. So I can't really walk over right now. What's your thoughts on SoFi hasn't launched Cash Coach yet and is almost a year since they first announced it publicly? So I actually just had a person reach out today. Here, wait. I have to make sure that they don't have any. So look at this. I don't think that this is giving away any personal information. I don't see anything. But they have a cash to optimize feature that they just recently showed off. And I'm not going to play this video just in case it goes to something that they don't want shared publicly. But let me just make sure of this. Doesn't say any personal information. Doesn't say any personal information. Okay. And then if they scroll down, they can see where they can potentially put this cash to work. And this is live in their app today. So they can stay on top of debt, pay down more of their student loan, or potentially review some of their recurring expenses. Like they can see they have to pay for Prime Video or something like this. Hey, maybe you want to cut that off to save more to pay off your educational thing. So I think Cash Coach is being rolled out. And I saw that as recently as today. So I'm pretty optimistic that we're going to see it in the next little bit, and it's going to be rolled out over the next few weeks. I mean, I'm already seeing people that are starting to get this. And the person that had that though was an affluent person. Okay, let's see here. What's the hang up on Cash Coach? I just showed you. I think it's going to be here like right now. But and honestly, if you actually look at that, I think it's pretty amazing. I mean, they're doing all the features that Rocket Money has about reviewing recurrent purchases and seeing what subscriptions are popping up. You have a way to take the money that potentially is not earning as much as what you could potentially be earning elsewhere, and that could be put towards loans that have higher APRs than what you're getting from an APY. So who knows? Who knows? Could be great. I'm pretty excited, honestly. I think that the products that SoFi have put out recently have been getting such little respect for how good they actually are. I mean, I think that the products for the analyst review stuff, the push notifications that show you exactly why a stock is moving. I mean, there's no other companies doing this. Like, You can't name me one. So Robinhood said that they want to do that, but SoFi has it today. Okay. And if you are somebody who's not an active trader, somebody who's just, getting with the basics, especially buying ETFs and things that they are potentially not wanting to buy in and out of, SoFi is building an excellent platform for that. Yeah, I want to get allocation into Anduril's IPO. The analyst ratings product is actually incredibly good. I know. And they're actually showing data that is like behind a lot of companies' paywalls. Like tip ranks. I mean, I'm freaking sponsored by the guys in terms of like I have an affiliate link with them. They don't actively pay me unless someone signs up with their thing, and I don't even think it's in my description. So I'm not making any money from them. But their tip ranks plus cost money to get what you have on SoFi for free if you just use the product. How do they pay for that? Well, they have all these other features that people actually want. Sorry, tip ranks. I mean, but tip ranks AI, where you're just guessing a price based on algorithms that some guy on your team has created with no background in picking stocks that I'm aware of, is determining the stock price of a company that's changing in real time. I mean, I think it's silly. If you guys ever see those things, unless it's from like some crazy reputable source, any AI sentiment on companies that tell you whether a company should be a good buy or not is usually 95% of the time dog shit, because it's basing it off its own collection of statistics that can be thrown off by a company's very specific business model. So if you were to look at the price to sales or the margins on Block, for example, because they transact in and out with Bitcoin, it looks like a company that just makes the most amount of revenue and then takes in after that such little net income on the billions and billions and billions of dollars that they're bringing in on gross revenue. And then you realize that on an adjusted basis, you have to take away Bitcoin. But no algorithm is just going to know specifically for that company. All other companies, we're not going to have to do this. But on that company, we're going to have to find the Bitcoin revenue line and take it out. And by the way, that's not an SEC filing. Like, companies cannot be looked at as just one big conglomerate. And so whenever people come to me and they say, oh, cash flow is that's the golden standard. And if you're not using that for SoFi, that's because that company sucks and they told you not to use it because they are not proud of the things that they're putting up. Yeah, or the way that free cash flow is actually calculated is that if a loan goes from not being held for sale, okay, like held for maturity to held for sale, you have to write that as a negative on free cash flow. That means businesses like Lending Club or Upstart or SoFi, every single loan that they end up putting through is a negative on their free cash flow. Are they worse businesses because they're selling their loans to their business model? No. Some companies really do have to be adjusted. That's why we have adjusting. Everyone used this blanket statement about Charlie Munger that someone said, if they use adjusted EBITDA, then it means it's bullshit. Yeah. If you were to ask him that same question, he would say, but there's caveats to very not so mature businesses. I saw one that said that one company was better deal because the PE was lower. Yeah, I mean, if you're going to degrade a company all the way down to one metric, I mean, at its base, that's got to be the worst picking strategy. At its base. Shane, brother. Hopefully you're doing well, man. Haven't seen you in a long time. Send me a DM or something. Tell me how you've been. What brokerage do you use in Canada? Mostly Wealthsimple. For more of the advanced trades or stocks or something that pop up that are not on Wealthsimple or something like this, I'll go to like TD. But mostly Wealthsimple. Pretty basic guy. I like to buy companies and then sell them later on. It's been a while since I've looked at SoFi Invest, and I'm impressed. I know, but a lot of the people who have talked poorly about SoFi, or even this goes across any product or whatever, they've had an experience years ago and then they never address it forever. I saw someone bring up recently an image to use against Vlad Tenev because they were mad at them, for example, and showed off how poor their options trading window looked. They said, "Oh, isn't this you?" or something like this. And Vlad specifically replied to this email saying, "You're using a screenshot from 5 years ago." Like, talk about the changes in Robinhood over the last 5 years. So, yeah. Are you a Robinhood customer too? No, I'm from Canada. So, no. I got a Google Pixel. You look and sound great. Gotta love Google. I mean, you don't have to love Google, but it could be a good investment. Okay. Let's talk some more different topics that I actually did have planned. This is one thing that I wanted to talk about. I saw this post that came out. It said things that have been launched in the last decade. And I cannot help but think that 10 years from now, there's going to be a similar list of the most used products in the world that encompass artificial intelligence, and how different this company list or product list is going to look like for artificial intelligence. And this is interesting. You know, all of these things are some of the hottest products that we've used in the last decade. And they were created in the last decade. And so, yeah, sorry, I don't think in the last decade, sorry, 2001 to 2010. But it's just very interesting for me that, you know, the entire internet age that we think of was created mostly in that era. And what this will look like 10 years from now, of the list of businesses, companies, products that are generative, agentic, physical, that are so much different than what we know today. And a lot of these same businesses and products will stand today because they'll integrate with those products, but new ones will be created as well. And I mean, you're already seeing massive ones like Wiz or OpenAI or Cursor or something like this. I didn't actually mean to say Wiz. I meant to say Cursor. But yeah, new products that are created out of thin air based on, a completely new way of doing things. Do you use Wealthsimple whenever buying options? I don't really buy options. I sell options. What will convince you to buy PayPal again? An increasing rate of revenue growth. Something that shows me that they're growing in market share versus their competitors in the payments game or in another space. But overall, market share growth is one of the compounds of investing that I use across anything. Total addressable markets, but also capturing those markets. So if PayPal is losing those markets, that's what I fear for. When Hood comes to Canada, will you move all your assets over to them? If it was Hood the way that America has Hood, obviously. If it's the version of Robinhood that the UK has, which is, just commission free or something like this, like slow rollout of products, no, I would not immediately use that. I already have commission free trading. I've got a bunch of other features. It's the entire cash management. It's the credit card. It's the everything for Wealthsimple that also attracts me there. I'm part of the reason why I like SoFi and Robinhood and all these ecosystem type fintechs is because I'm part of one. I see what Wealthsimple can do much different than competitors here. Would I ever pick up Adyen again? Yeah, I would. I don't currently own it though. When are you buying Nebius? Not at these prices. Are fees high when selling options on Wealthsimple? Yeah, they're not. They're not cheap. Definitely more expensive than what you would see on a US one. But I mean, comparatively to my other options like TD or something like this, yeah, they're much much better. Um, Can you send more insight on your mindset behind buying options and selling options? Just curious, respect your thoughts. So I I don't want to look to buy shares long term. I could potentially do that, but I don't want my money to expire worthless. Really, the way that I see it is that I want to use my equity and try to make income from that by selling a potential contract that someone can buy it into the future. If they do, then fine, I will have made a guaranteed return. Um, if it doesn't, then the option does expire worthless. Bad for them, good for me. I keep their premium. I try to put it into a price that's far enough away where it expires worthless every single time. Um, so yeah, I'm just thinking of it in a way of that I want to make an additional dividend on the stocks that I already own. Buying options might be a great way if I'm guaranteed on an investment that I think will appreciate over time in a certain time frame. But I've never really felt that confident. That's why I love why I don't even think I'll do necessarily too great on the 1 year ETF thing that we did, like the stock market draft that we did a week ago, which by the way, it started today, is because I never pick stocks for 1 year periods. It's not my, my strategy. What I like to do is buy companies that I think will do well over time. And then that compounds and compounds and compounds. And I don't know when they're going to take off, but when they do, I'm confident that they'll do well. And SoFi really fits that bill. I mean, if I were to have written options, and long dated options might have been terrific ideas, but during that time of going down from like $14 down to 4 or 7 was a terrible period, even though I had lots of belief in the company the entire time. And the company's financials look great, and the margins look great, and the customers on the platform look great the whole time. The stock was broken. So maybe some additional technical analysis, reading the tea leaves, whatever would have been able for me to figure that out. But I don't try to complicate something that my mentors have told me should be a relatively simple game. So yeah. I've taken like that thing of like, hey, don't get rich quick or whatever to like an extreme of like, okay, let's not try to complicate things too much because there's going to be aspects of that complication that maybe I'm missing that could tear the whole building apart. So keep it simple, stupid. Sounds dumb, but I mean, like it actually is just easier that way. And selling options, I was also anti on for a long time until someone really explained it to me and just realized that if you are so there's always opportunity cost. In a company like Palantir, you could have written options or selling options on it going from $13 up to 20 and think, oh my gosh, it's not going to hit that, and then it goes up to $140. You have potentially missed out on such a massive gain because you're not going to be able to roll those options all the way up. That being said, like, you still made a profit from 13 to 20, as much as you've missed out. And by the way, I'm giving you the most extreme example. An example that probably is more fitting is like writing an option on Nvidia at 140 and it going to 145, having to roll that out to 165, and now it might continue to run up to 180 or something before September. Like, I don't know. But still, you're making quite a killing on that company. What's the riskiest investment you've ever made? I'm not sure. I'm sure it's very early on in my investing career. I've purchased penny stocks before, stuff like that, but that's long, long, long time ago with no money. Your Palantir example was my real life. I'm thinking about a lot of people in real life. It happened to a lot of people. A lot of people got caught in Palantir options, that's for sure. Because companies shouldn't do that, or at least they don't do that often. They don't go from single digits to $140 in that short period of time. That's why it's such an amazing investment for the people who stayed long or even had leaps on that. I mean, those people are retiring. But it's a once in a generation investment. However, in technological shifts like what we're seeing in AI, you're going to see a lot of those because there was a lot of them in the internet age as well. And you didn't even need to be the first guy buying Yahoo to find it. I mean, Google came much later. So there'll be a lot of companies that come out and do great things. I'm not personally long on Palantir right now, but you can't deny the people who have been. They've made a fortune. But I missed out. And I'm honestly not too bummed about it. I mean, I was invested in things that I had higher conviction on. And if I was holding Nvidia at 30, which I would have thought that it was overvalued at that point, and it went to 40, I would have thought that that was overvalued and sold it. And if it went to 50, and I remember whenever it went from 40 to 50, it went from 50 to 60 very quickly in that period. So if I didn't sell at 50, I definitely would have sold at 60 or 60. Every single period, I would have sold it from here. So I'm not mad that I'm not at 140 because I never would have made it. Like never ever. Where are you from in Canada? Toronto. The valuation is mad. I mean, yeah, I think so, but keeps climbing. I'm curious. Well, actually, in the next 12 minutes or so, I'll be on a panel with two big Palantir bulls, so I'll let them answer. But yeah. Go to that show to hear what I have to ask my two Palantir friends. I'd like to short Palantir, but not yet. Yeah, that's a dangerous game. I don't know if I would go anywhere near that. If there's one thing I've learned, like once a stock is irrational, like it can keep going. Tanner, what are you buying now? Not a whole lot, to be honest. Yeah. Last thing I bought was SoFi. I go to Toronto to watch Yankees and Blue Jays many times. Cool. I've never seen a baseball game. Never, not once. Dude, Trump Organization unveils their T1 smartphone at $500, which will be available in September, and they are going to make it in the US. What are we talking about here? Trump smartphone? Trump mobile? Holy. The T1, the Trump one. Crazy. I came out a while ago. Hey, I mean, a lot of cool products coming out. Maybe it doesn't have to be between Google and Samsung and Apple. Maybe Trump phone, you know? Speaking of new product announcements, we had a sneaky little one that I'm sure we can assume what it is. Meta and Oakley's said the new evolution is coming June 20th. So maybe this is a version of the Meta Ray-Bans, but for another glasses company. I mean, that's what I would assume it is. New designs, same software. That's what I would imagine. Similar hardware, but different frame. Yeah, keep an eye out for that. On a little, war news, if you want to say that, U.S. officials, although bringing a lot of things closer to the Middle East, including the Nimitz carrier group now advancing towards the Middle East. U.S. officials confirmed that forces in the Middle East remain in a defensive posture and that the U.S. is not yet participating in strikes against targets in Iran. The market, regardless, I think will have some level of a sell-off tomorrow because of this news. That they might be in a defensive posture, but overall, the posturing does look like they're getting closer to the Middle East. And that will worry new, or not new investors, but overall the investor class. And now they're monetizing WhatsApp? Yes. Meta is also doing that. But ladies and gentlemen, I mean, we talked about stablecoins. We talked about the new form of modern cards between SoFi, Robinhood, Coinbase, and Amex. Amazon's Kuiper satellite launch is delayed because of one of their rocket boosters had an issue. So, little sad. That would have been their second one. Kalshi said that accidents per million miles, as per BBG intelligence, that Tesla is by far outstripping not only the U.S. average driver, but also the Waymos as well, being about 1/6 less crashes, or about 26 times the safety level of the average U.S. American. So maybe we do see unsupervised full self-driving doing a full launch into America quite soon. If you know the Highway Safety Patrol Act, whatever it's called, ends up reviewing more of what Tesla has to offer in terms of robotaxi in their current fleet or in Cybertruck or Cybercab, that safety will be the number one concern. Hopefully. Hi, what are your top 5 stock holdings? So I do openly talk about all my investments, and I've said very many times the 5 top companies that I do end up covering. But I also do have my entire stock portfolio and all the buys and sells exclusive for my course members. So to give them sort of a little something extra, I usually try to keep that to myself whenever it's asked in that manner. But I mean, it's pretty clear that Nvidia holds like 42% of my total portfolio, and I like a bunch of other names. But I do really appreciate my, course members, love them dearly. And so we keep it just for them. But yeah. Let's see here. Yeah, not too much other news. I mean, we're going to see the FOMC report, rate decision, all their, projections, whether they have a rate cut, press conference, all on Wednesday. So that's all going to be around 2 p.m. Very excited to see Jerome Powell. But we'll wait until then. Ladies and gentlemen, I'll be live tomorrow. But yeah, keep investing, hold steady. These could be volatile times, but we're long-term investors. Thank you all so much for watching. Really do appreciate your time. Bye for now.